Hi and welcome back to today's more important analysis videos on Tuesday 22nd of November with me, Richard Power Market Analyst at Handtech Markets. Let's look at dollar yen now. And are we starting to see the beginnings of a little corrective move? There's sort of consolidation candles are beginning to rack up. Now this is coming just underneath all this key resistance from April and May. 1143 and 1190 are those key highs. 1136 was the high yesterday, so that's just underneath that 1143 high. But then that sort of produced a bit of a sort of consolidation candle, very similar candle to what we've seen on Wednesday last week. And it's interesting that today's candle is at the moment again very similar. But there's nothing yet which is suggesting that this is going to be the beginning of a correction. Just at the moment, it is a consolidation. You've got the RSI at 80, which is stretched, yes, but everything else pretty much has not really reacted yet. But I think 109.75 is key. 109.75 is this old breakout level of resistance, which became supportive on Friday. Now, if you can see here that 108.54 was the reaction high, and then basically became the level of support. So you've got these two sort of breakout levels that have become supportive. Now if you lose 109.75, that would complete, which become basically a top pattern, but you've also got these sort of mildly negative diverging movements on the MACD lines and the RSI. If the RSI goes below 40, I think that's a trigger also, or that would be a signal. I think if the MACD lines go consistently below neutral, look at the stochastics, are they beginning to turn over again? This could become a top pattern, but for me, I think we've got to just be a little bit cautious. The trend higher is obviously slowing, and I'll tell you for why, because you look at the 55-hour moving average has become a basis of support. You've now sort of broken below that, and you're now sort of falling back below it again. It almost came back to test that 89-hour moving average, which had been the first time since the rally began that had been seen. So again, that 89-hour moving average at 110.31. So that would be a trigger or a signal if that were to be seen. I think that this is beginning to certainly slow, but it may just be a consolidation. So 109.75 is your key level of near-term support. If you break that, you're looking at 108.55. If you break that, you're looking at 107.50, which is the big breakout, this big sort of medium to longer term breakout of 107.75, which is that neckline support. So a few levels for you to work with there, but there's not a great deal of upside potential from here, maybe 100 ticks towards that big resistance for the April highs. So I wish you good luck in your trading, and I will speak to you later. Thank you.